Welcome to Our Stock Trades. In this video, we're going to be giving some market wisdom and talk about Mr. Market. By the time you leave this video, you're going to understand how to effectively time the market by looking at evaluation. To continue about the Mr. Market discussion, we have to understand that when you're investing, you are investing in a shared collective. You and your fellow comrades and investors within the same market are basically exchanging this said stock. Sometimes the market may be moody. The market may experience bipolar shifts in mood. Sometimes this Mr. Market comes knocking on your door and wants to sell your shares at a premium. Other times, he's in a bad mood, wanting to sell his shares of the company and not giving a damn or a cahoot about the stock price. You see, over time, a business slowly increases in value. Sometimes a stock reflects its intrinsic value and sometimes it does not. Stock market over and under corrects and it goes through cycles. And it is part of the whole market cycle, and it's up to you as the investor to understand when things are overvalued and when things are undervalued. Warren Buffett and Benjamin Graham, more specifically Buffett, he likes to think of investing like a farm. You see, farmers don't get quotes every single day. They know that if they work hard and do the job well, they will make a decent profit in the future. The problem with stock investors, the typical investor, is that they could check the stock price and the quote every single day. In fact, multiple times in one day. And with all of the noise of Wall Street, it gets to a point where it could lead them to be emotional. Warren Buffett prefers to think like a farmer, not like a stock investor, which is why he lives literally near farmland in Omaha, Nebraska, literally far away from a developed Wall Street. And he's the richest investor of our time. The best. So we're going to go down here and talk about Mr. Market news, okay? So let's just say we have an economic recession and you see the Clover Health stock price go down, Palantir stock price go down, or any other stock price continues to go down. Investors might start to panic. You see, for the Clover Health example, people will still go to the doctor's office. Therefore, the intrinsic operations of the business have not changed. So as an investor, as an intelligent investor, you must filter through this noise, and you got to do it effectively to a point where you're not taking in all of this nonsense, all of these headlines that are consistently fogging your memory. You have to always ask yourself, does this news cycle, does it affect the business as a whole? The fundamentals of the business, is it affecting? You see, stock price fluctuations do not make you rich or poor. You must take advantage of Mr. Market's mood swings. That's the only way to generate a over than average market return. If you would like to be average, you're going to get average results. So you got to do things differently from the herd. And that goes into our quote from Warren Buffett. And I'm sure you've heard this many times. He said that be greedy when others are fearful and be fearful when others are greedy. But if you go here to the smart and dumb money confidence spread, as the market continues to dump, dumb money, which is retail investors, because Wall Street has access to all of your numbers, what type of trades do you buy and sell, because that data is worth a lot. And people would pay for that. And we have access to that. And what we've seen is that when markets go down, retail investors, dumb money sadly sells. But smart money, institutional investors are buying this dip. Likewise, if we go in and take a look at the fear and greed model, you can see that right now we are at extreme fear. This is extreme greed. And the bottom here is extreme fear. Let me go ahead and minimize myself. And as you can see here very closely, when the 2020 pandemic happened, many people were selling. We're at extreme fear. And we're at levels to where it's telling us that we might be close to that level. So it's important that when people start running for the hills, like right now, you start buying. Likewise, when people think you can make a quick buck during the whole 2021, the early part of 2021, that's when you sell. So overall, you must embrace bear markets. You buy low and sell high, and you try to find stocks that are at lower and trading below their intrinsic value. Because let's face it, when you're in a bull market, you're lucky if you can find a stock that is at fair value. And that's what you're going to be investing in. So the million-dollar question: can you time the stock market? Here we have a patient investor patiently waiting for their farmland to grow crops. And on the left, you have an impatient investor, getting in, getting out, getting in, getting out, coming for a loss. The answer is yes, you can time the market, but you cannot time it in the process of time, but value. By finding the intrinsic value and doing a calculation on the stock, and not just the stock, but look at it as a form of a business, by taking all the shares together, gluing them together to formulate the business, and taking the business and projecting out to the future to see, based on its growth rates, is this stock undervalued? Then and only then will you be able to know if it's at a bear territory or a recession level territory. And that's when you buy. Because over time, as the fear and greed model switch, in the bull market, stocks will ascend to their intrinsic value and even past their intrinsic value, to a point where you should sell. This is a crucial concept in analyzing how to time the market. You have to look at the value. And if it's trading below value, that's when you go in. Question that people have is, how do I calculate the value? And that's when you have to look at an intrinsic value calculation, which is what I'm going to be teaching you in the Mastering Stock Market course. So in conclusion, Mr. Market has a lot of mood swings. He's going to be knocking on the door every single day, and you got to choose whether you open it or you don't, or just ignore it. Warren Buffett and Benjamin Graham taught us that unless you are in a bear or bull market, you should ignore Mr. Market. Both good and bad news in the media should not change the value of the stock. Again, in our Mastering Stock Market course, we'll be teaching you how to time the market by evaluating the fundamentals of the business. Stocks bought below the intrinsic value will provide an above market return to the patient investor. I remind you, Warren Buffett said it best. The stock market is a device for transferring money from the impatient to the patient. Take the data, utilize a scientific, artistic approach, and you will get above market returns. But let me be clear and preface this. This is extremely difficult, and it requires you to question, why are people running from the hill? It forces you to stop the human nature, the psychology of increases levels of cortisol, the fight or flight, sympathetic nervous system response, and allows you to tame it and control it as an investor. And then and only then will you be able to truly understand a Warren Buffett type of investing. Now, for all my technical analysis day traders out there, this may not be your level of investing. But for the long-term investors, this is how they do it. And we'll be going ahead and democratizing this information. If you like this video, consider subscribing, liking, and hitting and turning on all notifications. It does help with the YouTube algorithm. And we'll be supplying our subscribers, our course members, with information that will save you from making a stupid mistake. And the transformation of this will turn you into one of the best investors, literally, within the markets. You will understand more than 99% of investors, sadly. And the numbers speak for themselves right here. The numbers speak for themselves. It is a privilege and honor. God bless you, and I'll see you on the next one.